Afternoon, everyone. Thank you for joining us today at Travel Vault's second webinar on the latest developments on COVID-19. My name's Christina Brazier. I'm the Operations Director at Travel Vault, and I'm joined by Matt Purser and Adam Pennyfather from Travel Trade Consultancy and Farina Azam from Kemp. Today we'll be providing an update on the latest developments in general, as well as a legal perspective, and we'll also be taking you through some of the financial support measures being introduced by the government. To manage the call effectively, all attendees will be on mute, but we will take questions via the Q&A function on the Zoom app. Please make sure you use the Q&A function, not the chat function, just because it's quite difficult to manage both at the same time. If you're dialing in by phone, please feel free to email me directly and we'll try and get through as many questions as we can. Please note that we will be recording the webinar and we'll be making it available shortly afterwards for those of you who need access to that. First of all, and just one other thing, we are all operating from home, as I'm sure you can imagine. So please, apologies in advance for any technical errors or any unexpected interruptions. So first of all, I'm going to pass on to Matt Purser for a general update on what's been going on in the industry in the last week. Matt?
Yeah, thanks, Christina. Good afternoon, everyone. So we'll just cover off a few bits really that have changed in the last week. One is an update on possible changes around the package travel regulations. So as many of you probably know, ABTA have been taking the lead on this in terms of trying to get government to change one specific term in there, which is around cancellation of bookings, and that refunds in full should be provided 14 days from the cancellation. So what ABTA have been trying to do is to get government to agree that rather than refunds, they could issue a refund credit note, is the correct terminology that they're using, instead, which obviously would help hugely with people's cash flow. The latest on that is that it's still awaiting government approval. As I understand, it has been approved in other parts of the EU, but the UK has still not signed off on it yet. But what ABTA have since done is to put out a note anyway, which is to say that they would recommend people following the refund credit notes procedure, which is that the refund credit note gets issued in the amount that the customer has paid so far, that it is linked actually to the booking that they had in place before, so that allows the financial protection to remain in place. But the deadline they've got around that is the 31st of July. So the 31st of July is the deadline where customers should either have then rebooked and used that credit note, or the customers then push for their refund. Now, quite clearly, the credit note only works really if you're also getting the credit through from any suppliers that you've prepaid as well. And so we're going to come on to some of those in a second. But obviously, otherwise, if you're not getting any credit from any suppliers you've prepaid, all you're literally doing is pushing something down the line to cause a problem at a later date. I know questions come in already regarding why 31st of July. I think that's a deadline that ABTA have come up with because most ABTA members provide a bond for their financial protection. 31st of July really is a date where they feel that the insurers would not be happy to protect going beyond that date. Now, obviously, with Travel Vault members are protected through an insurance policy as opposed to a bond. So we'd need to get clarification around that. And whether that date will change, I think it really depends on how the coronavirus pans out. Really, obviously, none of us know how long this is going to go on for, so we've got to wait for the outcome of that and whether that has the ability to get extended. One of the other things that's been happening in the background is around these refunds or lack of refunds that have been coming through from suppliers and in particular airlines. So as we understand it, airlines have been issuing credits notes again going forward, and they've been coming from in the name of the customer rather than the name of the company. So this is something that the industry is pushing for, is that actually they're issued in the name of the company rather than the name of the customer. In case that customer doesn't want to travel in future, then at least that credit can be used against another booking. As I understand it, I had a call earlier this morning and someone said to me that EasyJet had started to relax it, and so I'm not sure if anyone else has seen that as well. But the EasyJet started to relax that and are issuing them in the name of the company. I'm not sure if that's across the board, but hopefully that is the start, and other airlines will then start to follow suit. Obviously, the other thing that's come up as well is around chargebacks. So I think a lot of people are nervous that despite all these credit notes that have been bandied about, then how much of those will actually be accepted by the customer, or will they just push for a chargeback to go through? We've spoken to a lot of people around this, so from the merchant acquirers, and we've also seen some guidance that's been issued by MasterCard and Visa, and it's really pushing people away from doing chargebacks. So I know that MasterCard and Visa are aware of this idea around credit notes, and it's really pushing for the merchants and the customers to reach an agreement around that credit note, that is accepted, and that chargebacks shouldn't be the default position, but they should actually be the last position where everyone gets to if a refund is due. So everyone is pushing away from doing chargebacks. I also understand that every time obviously someone applies for a chargeback, whether it's accepted or not, then there's a cost involved in that. So I think chargebacks literally are the last route for people. So I think keeping that correspondence open with your customers, trying to get them to agree around this change that ABTA are pushing for around the credit notes is probably the way to really minimise the number of chargebacks that you will have on that. I know Farina is obviously going to speak from a legal point of view, because obviously there were certain things said in your terms and conditions that talk about cancellations. But yeah, as much as everyone can agree to accept that credit note, and I think that's going to be the best and chance to reduce any failures that we have, but also reducing any chargebacks that could go through as well. So that's all I wanted to cover for now. So I'll pass back to Christina, and obviously we'll follow through some of the questions a little later as well.
Thanks, Matt. Actually, if you don't mind, I've just had a couple of questions come through that I think would be good to ask you now.
Sure.
Just from your general perspective, from speaking to all of your clients, how many companies are you seeing actually refunding at the moment, or is it your experience that most people are awaiting the outcome of a potential government decision?
Yeah, so most are not refunding. I think the only ones I've heard of where people are refunding is if customers are really shouting about it, and even then they're still trying to sort of delay the process. So most people are holding onto the cash if they've got the cash, and trying to delay that process as much as they can.
Absolutely, thank you. And we've had a comment from someone saying some major established household names are not planning on ever issuing refunds. Farina, maybe this is perhaps when you could come in. I mean, is that likely to be a legally viable route, or is it just something we're not clear on at the moment? Matt, you may need to unmute Farina.
Oh, sorry. I didn't know I had that much control.
There we go. Sorry about that. Hi, everyone. Yeah, in respect of sort of never refunding, I think ultimately we have to remember that more than that customers do have a right to a full refund under the PTRs where the organizer is not able to provide the package holiday anymore, and that is the position under the PTRs. If an organizer can't provide the package, customers do have a right to a full refund, and that is a legal position currently. It's not yet changed. Obviously, we are hoping that it will change, but if the rules aren't relaxed, then that is the ultimate legal position. So in terms of, yes, obviously we're encouraging credit notes and we're putting some time limits on credit notes, but in terms of never refunding customers, I don't personally think that's going to be a legally viable position, because the customer does have legal rights under the PTRs, and without the PTRs amending, you know, that's a statutory right that they have.
Thank you. And I mean, obviously, things are happening so quickly at the moment. Have there been any updates in the last week from a legal point of view, based on what Matt's been saying?
Not too many, actually. So in terms of developments, it's been a pretty quiet week. Obviously, we've all been waiting for the PTRs to change and the rules to be relaxed. And it felt like we were going to get that sort of early this week, and it hasn't been forthcoming. So I'm not sure when we're gonna know about that. I would like to think by the end of this week we would know, but equally I was hoping by the end of last week we would have heard something. So just sort of, it's just a bit of a wait and see scenario at the moment. But in terms of actual legal developments, you know, it's very much the same as we discussed last week. You know, there's two main regulations under the PTRs that come into play here. One of them is 12.7, where the customer wishes to cancel their holiday due to unavoidable and extraordinary circumstances, and whether that applies. But then you've got regulation 13, which applies where the package organizer has to cancel the package, and the rights that the customer has there, which is to a full refund. And sort of beyond that, there haven't been too many developments.
Okay, thanks for that. It seems like the rest of the world is moving, or the rest of the country is moving so quickly, apart from the government on this point, which is frustrating for many. So what we'll do is we'll move on, and I'll ask Adam to share his presentation or his short summary on some of the financial support measures that are being introduced by the government. And then during that time, I will look through the questions, and we'll look to deal with the majority of the questions at the end. So Adam, if you wouldn't mind sharing your screen, and Matt, you may need to unmute Adam.
Cool, good. Well, good afternoon, everybody, in that case. So I think, well, as Christina said, just going to fairly swiftly canter through some of the government support schemes that have been released. I will caveat it by saying up front that, you know, we've heard lots of big headline grabbing statements from the Chancellor, which all seem very supportive, but with a lot of these initiatives, we're waiting for some of the details. So I'll go through each one that's out at the moment and hopefully give you a bit more of an insight and some tips on what to do for each one. If there are any questions, then please feel free to ask. Let me just see if I can move screen. Right, here we go. So at the moment, there are, as I said, quite a few. We've got the coronavirus business interruption loan. I'll talk about that in a bit more detail. We've seen quite a lot of interest in that, so we'll go through a few more areas on that as well. In terms of the grants, these are for retail, hospitality and leisure businesses. I'm not sure of the definition of leisure at the moment. I'm hoping that would include travel companies as well. But certainly for those that have got shop fronts, it would appear that at the moment it looks like you will be eligible. And there are two that we know of now. There's one that is based on your rateable value, and that's a rateable value of between 15 and 51,000. And that would allow you to eventually get a grant up to 25,000. That's alongside the smaller one, which is 10,000. They're both going to be administered by the local authority. And so what I suggest, if you haven't done so already, even though the government are saying you will be contacted in early April, so the plan is that local governments or local authorities will be instructed on 1 April, and they should be getting in contact with the eligible businesses. But certainly on the small business rates relief, so if you qualify for small business rates, you could be eligible for a £10,000 grant. What we're seeing is that some clients are in serviced offices, and so it might be your landlord that applies for the small business rates relief on your behalf. And so what I would say is make sure you speak to either the landlord or the local authority, just to make sure that your details are there and you get contacted in the coming weeks to see if you are eligible. Rates relief, again, this is across retail, hospitality and leisure. Shop fronts appear to be definitely eligible. Again, whether travel falls under leisure is not quite clear yet. And so if you've got a travel company that operates from office, it's not entirely clear whether you would be eligible for any rate relief at the moment. Statutory sick pay, there have been some updates on that. Again, details are kind of awaiting, especially around the recovery of the statutory sick pay. But if you've got somebody that's either sick or self-isolating because they've got a member of their family, or indeed themselves just self-isolating, then statutory sick pay can be paid from day one. And this is for companies at the moment with small and medium companies with less than 250 employees. But again, at the moment, the advice is, if that happens, keep the records of who is sick or self-isolating, and hopefully the recovery mechanism should become a bit clearer in the coming days. Time to pay arrangements. So this is a lot of these schemes, as I've said, we're kind of waiting for details on when they become available and how. Time to pay is something you can do immediately. So that can be across all of your taxes, and we'll talk about some of the others that are automatic at the moment. But it could be, PAYE, VAT, corporation tax. I think there are roughly around 2,000 employees at HMRC that are ready and willing to take your phone calls. I still think you'll find a hard time getting through. But if you do want to negotiate a time to pay, then I would say not just pay your tax. Please phone ahead, but be prepared to go to HMRC with a proposal. They won't tell you what the term is and how long you would pay it over. You need to essentially present to them what your situation is, how you've been impacted, what you've done to mitigate the impact, and how you plan to pay said tax back and over what period of time. I think at the moment that call centre has the authority to give 12 months up to £100,000 debt. So most of those taxes should be covered, and you should be able to negotiate that. But any questions, feel free to ask me on that one. The next one is the VAT deferral. So this and income tax you'll see on the screen after that, they're both automatic. So you don't have to pay VAT for the next 3 months. And that VAT is going to be paid at the end of the tax year, so next April. One tip that came out yesterday was that if you are on direct debit for your VAT, which I would imagine some of you are, you need to cancel the direct debit yourself. And so you still need to submit returns on time, but to stop the direct debit going, HMRC can't do that for you. They can't do it en masse, and so you're advised to stop your own direct debit going out. Of course, you can opt to pay it if you wanted to. Income tax, again, so most of you or owner-managed businesses might have some personal tax, part payment coming up on the 31st of July. That's again doesn't need to be paid and will be delayed and due on the 31st of January next year. And last but not least, we've got the job retention scheme. So quite a few details are waiting on this one. Broadly speaking, it's for people that you would have otherwise potentially made redundant. They would have needed to be on the payroll as of the 28th of February last month. There is an online system being developed, and that is expected to be released in April. And so for those of you wondering about the payroll that you've got that's imminent for March, you would be expected to run that payroll as normal, and you would effectively make those payments. Now, if you can't do that, then HMRC and the government are saying, well, that's where you would fall back onto the CBILS, the Coronavirus Business Interruption Loan. And so and then what would happen, you would pay, and then next month, in theory, the employer, you would claim that money back from HMRC in this new online system that's being developed at the moment. I think one important point to note, for owner-managed businesses, if you're on a structure that is part salary, part dividend or drawings, it is only the salary that will be taken into account, and that's of course the 80%. I'm going to move on to just the CBILS scheme just in a bit more detail. It is worth noting that a colleague of mine, Martin Alcott, and I did a session yesterday. There is I think a 20-minute, or no, actually a 40-minute section on LinkedIn. But if you want the video, then please let Christina know, and we can point you in the right direction. So I'll go through this, but if you do want to see a longer version in a bit more detail, then feel free to get in contact or have a look on LinkedIn. I believe there's a link on our TCC page. So the CBILS eligibility criteria, the loan needs to be for business purposes. It can be for working capital to get you through these troubled times, but it can also be for the development of the business. Another requirement just doesn't just have to be for working capital. At the moment, it's only available for businesses turning over less than 45 million. That was moved up from 41, is currently being reviewed. It may go beyond that, but we're not quite sure. You need to be operating in an eligible sector. Luckily, travel is. Again, SMEs and primarily trading in the UK. You need to be, or you don't need to be suitable for the usual lending criteria. What I mean by that is that actually a lender will consider you under their normal lending criteria first, and only if you don't meet that lending criteria for the loan you're applying for would you then be pushed into the CBILS scheme. That's quite an important point. You need to have a sound proposal and also be able to demonstrate that you can meet your repayment obligations. A lot of the lenders are looking at your trading activity over the last 12 months and then looking for reasonable assumptions around when you expect to come back and will you be a viable business once this is all blown over. And last but not least, you need to have had no more than the European state aid maximum, which is I think €200,000 in the last 2 fiscal years. The key features of the scheme, as I said, so you've got the British Business Bank, which are guaranteeing 80% of this loan to the travel company, but in the middle you've got accredited lenders. A lot of the high street banks are in there. The loan maximum you can have is 5 million. The maximum term is 6 years, although we are seeing some banks set their own maximum of 5 years. As I've said, there's an 80% guarantee from the British Business Bank to the bank. So the guarantee is between BBB and the actual lender itself, not the company. There is no interest or fees for the first 12 months. So again, the British Business Bank will pay those fees on your behalf, essentially, for the first 12 months. We are seeing, it's not on here, but we are seeing that some lenders are offering a 12-month capital holiday as well. But that's subject to criteria. There is, we'll come on to this on another slide, I believe, but there is, or maybe not, there will be, we're seeing a lot of security being taken, usually in the form of personal guarantees, although you may have seen on the BBC website this morning, there was quite a lot of upheaval about that, and so that may change. But it's important to note that you as a travel company remain 100% responsible for that loan, and the lender will chase you before it would ever go back and lean on the 80% guarantee from the government. Here's just a few of the accredited lenders. You'll see most of the high street banks are on there. What we are seeing is that banks and lenders are prioritising their own customers. Some of them are requiring or only lending to their own customer base initially. So it's certainly important, if you are interested, to speak to your relationship manager or your bank. We are seeing application forms being released now. Some are not quite there yet, but you can register your interest. Certainly start that conversation with your own bank. If your bank is not on that list, I know for sure NatWest are receipt or looking at applications where you don't have to be a current account holder. So in terms of the loan itself, one big question is how much to borrow, and I think there are 3 key things that you need to think about. One is the need, and again that would come back to what's your shortfall of cash with the current crisis. Appreciate there might be some unknown quantities in there in terms of, how long is this going to go on? Do people need to make? Do you need to make refunds, etc.? But certainly, I've looked to make some reasonable assumptions around that. The second really is the affordability. As I said, you need to be able to prove or give comfort to the lender that you can pay that back. And the third is this idea of CBILS limits. What we are seeing is three things really. So you've got liquidity shortfall, i.e. what's your shortfall in cash as a result of the crisis, and how much do you potentially need to see you through. The other two are 2 times your 2019 salaries, or 25% of your 2019 turnover. And what we're seeing is that actually these are creating guidelines or ceilings at the level at which you could borrow from any lender. I've just got a quick slide on how much you might think or how you might work out how much to borrow. So what I've got here is just a very quick graph on what we might consider to be a typical summer tour operator. So you'd have cash, bookings coming in, cash building up until Easter. That would tail off with some Easter departures, then builds nicely up through the summer. And as those departures, as they depart, then you'd see the cash dip back down. Here we're kind of plotting out, well, this is what it might look like now. As you can see, cash has fallen off the cliff. And you'd end up with some expected trough based on your assumptions on when this would come back. As I said, you may have differing opinions on what that is, depending on refunds, but also how long this is going to go on. You may have certain destinations that sell at different times, and so your cash forecast might look slightly different to this. But obviously there'll be a trough to get you back to zero, but then it's really, again, up to you, considering all the other factors on, how much you would expect to borrow or want to borrow to get you beyond that, to give you enough of a comfort blanket to see you through. I did mention security earlier, so just a quick slide on security. As I said, this was in the BBC News this morning. So RBS and NatWest are quite relaxed, it seems, although it was being reported on their security. Certainly what we'd seen up to date with most other lenders is that anything below 250 would definitely carry a personal guarantee. The only caveat to that is that they couldn't, in the scheme rules, they can't go after your house. And so that's, I guess, some comfort level for people. And then also look to have a debenture over the company. Above 250, now this would be on a case by case and to be negotiated. They will be looking at, what assets you might have in the business, but also personally, and there'd also be a debenture in that case as well. So that's it from me. Appreciate that I've gone through that quite quickly. As I said, any questions? There is the full 40-minute video if you've got time to watch that. But if not, any questions, feel free to ask now or get in contact.
Thanks, Adam. We have had a couple of questions through, actually.
Okay.
So just looking at the CBILS first, one specific question was, can the CBILS loan be used for paying off a previously taken out loan?
Yes. There are, as we understand it, so the CBILS scheme is, a reskin of a previous scheme called EFG for short. But even if it is an EFG loan, it still looks likely that you would be able to effectively refinance any existing loans. I think if you could demonstrate to the lender that actually, refinancing this, and you can, essentially afford to pay back, the new debt, then I don't see why there'll be an issue with that.
And are all the different lenders charging the same interest rate?
Very good question. I am not sure. I would imagine no. It'll be subject to their own internal assessment, really, of the business. It will vary from business to business depending on the risk. They are obviously on risk for 20% ultimately. So I think it will differ from case to case and bank to bank.
Thank you. And we've had a couple of questions on the fact that the government is guaranteeing 80% of the CBIL. So one question, for example, is, does the personal guarantee the 100% of the loan, or just the 20% that the government isn't covering? And again, a similar question in terms of the security. Is the security just for that 20%? So you see they're quite similar questions.
Yeah, no, so it's quite clear, and I've seen a few application forms now from different lenders, and there's actually there is a, if you look at Lloyd's, they've got a written example on that, and the borrower would be 100% liable, and so your security would be over 100% of that, not just the 20%.
Okay, thank you. And is there a date, like an end date for when the CBILS needs to be applied for? Do we have any details of that at the moment?
That's a good question. I think it's running at the moment to the end of September.
Okay, thank you. And so moving away from the CBILS, one of our members has identified that it may not be suitable for them, and they're looking at all the other measures that are available. This member particularly runs from a home office. Is there anything that you think would be more suitable for them in terms of financial aid? They're a very small company based at home.
So unfortunately, if you look at the grants and the reliefs, they wouldn't necessarily apply. So I don't think there is any of those that would be available. And so what I'll be looking to do is really use some of the other initiatives whereby, unfortunately it's not grants, and so it's not free money, but you would be looking to take advantage of, the VAT, and other, maybe a time to pay arrangement or other taxes, just obviously depending on personal circumstances, but just to allow you to have some breathing space with what's going on at the moment.
Okay, thank you. And just a few questions on the employee retention scheme. You mentioned earlier that the employees need to be on the payroll from February the 28th.
Yeah.
One of our members hadn't seen this. Is that in government guidance, or have you seen that elsewhere?
It is in the public domain. I can't remember exactly where it's come from, but if you let me know that particular person, and then I can follow up with a link to where that information lies.
Thank you. And
it's Christina, I think it's actually guidance from one of the institutes.
Right. Okay.
But yeah, if you let me know, and I'll happily forward a link on.
Great, thank you. And one of our members has thought it would be useful to highlight to everyone that the furloughing of an employee means that they are not allowed to work for that employer during that period. Yeah. That's correct, isn't it?
It is. That's causing a bit of a stir at the moment. And there is this other concept around job sharing, which makes it even more tricky, for want of a better technical phrase. But that, I understand, is being debated at the moment. So it is still fluid, and it might change. But yeah, as it stands, if you were to furlough a particular individual, they can't work in the business.
And a couple of questions still on that same subject, but as to whether companies have to pay PAYE and national insurance.
Yes, they do. That's how it's understood at the moment. Again, that's coming from the Institute. You would have to pay all taxes as normal, but then the 80% would effectively reimburse you for, gross salary, employers' national insurance, and also pension contributions on top. So obviously, depending on the salary level, that may or may not cover everything, but you'd certainly get the 80% of that.
That's great, thank you. And sorry, moving back to that point about the employee not being able to work, one of the questions come through is, can they work voluntarily for the company? I think that's probably the same answer as no, isn't it? It's a bit of a tricky one, but I guess everyone's trying to find a way around that potentially.
I think the way to think about it is, it's option A or option B. Option A would be redundant, and so actually that employee would, in the usual circumstances, leave the business and not return, or certainly weren't unlikely to work on a voluntary basis. And so yeah, option B is furlonged, and so really think about it in the same way, but albeit you're collecting 80%.
And we've got a question. This might be a bit too specific. I'm not sure if you know the answer, but it's somebody's been they stopped paying wages on an employee since the Thomas Cook situation to ensure the business was kept afloat. They are registered on payroll, but haven't been paid in February. I don't know. Do you know, would that still apply, or is that a bit of a query on that one?
Yeah, I would take that one away because although it is stated they have to be on the payroll, there isn't anything at the moment that would say otherwise. So I don't see that as being a problem. But again, it is a moving situation. So if you let me know again who that is, I'll take it away and follow up once I know more.
Okay, thank you. I mean, I think we've seen quite a few questions come through on that. So I think it just is clear that people don't have a lot of clarity on that at the moment. But thanks for your answers.
No problem. So I was going to say, we are planning to follow up on all of those subjects once more detail is released. And so if everyone's happy, you know, we can either do another one of these or can start to, you know, send some sort of documentation out to people.
Yeah. Thanks, Adam. That's been really helpful. Just been looking at the Q&As coming through. There's a few, they seem to be in kind of three key areas, really. The main one being moving back to the issue of refunds. So it may be that Matt and Farina, I need to probably call you back in here. One of the, I think this is a bit of a $64 million question, really, is how long do we think this is going to go on for? I mean, one of our members has said they're looking at rescheduling one of their trips to June. But do you think the industry feeling is that's too soon?
Well, I think that's the difficulty with the whole situation is no one knows how long this is going to go on for. I mean, you know, we're now told what South Africa is going into further lockdown today, so things seem to be getting worse at the moment. So yeah, I just don't think we can say really. I mean, I think everyone is hoping this is over and done with as soon as possible, and we can just go back to some form of normality, really.
Yeah, absolutely. I think we'd all agree with that. On the refund credit note that ABTA have obviously published guidance on, just wanted to give some clarity to our members as well that we have checked with our insurers, and provided you follow the guidance issued by ABTA in that the refund credit note actually refers to that booking and the booking reference is maintained on that, then those bookings will still be protected under the Travel Vault scheme as well, and you will not be charged an additional premium on those unless, of course, the price to the customer increases. And a question on that, Farina, if the rearranged package increases in price because obviously the flights go up next year or it's at a different time of year, who is supposed to bear the cost of that? Can you charge the customer for that increased price?
You can, yeah, because you are not offering the, yeah, I think ultimately, yes, you can. I'm sorry, I'm just trying to read through the part of the regs that would apply. So yeah, you could, because you're not cancelling the holiday as such, it is still going to be linked to a booking with the refund credit note, and then essentially it's an alternative holiday that you're offering. So if it's at a time of year that's going to be more expensive, if the flights have increased, I think you should be able to pass that cost on to the customer. But I think probably I might just double check that point.
Okay, thank you. And Matt, you talked about earlier this 31st of July date. I think a lot of people think it's helpful, but there are also a lot of people thinking that this situation isn't going to be resolved by then, and you know, that date is useless. But just to clarify one point, the 31st of July is correct, isn't it? That you don't have to have booked your holiday before then, as in the date of the holiday doesn't need to fall before the 31st of July. It's that you have rearranged something by that date, or that a refund should be issued. Is that right?
It is, yeah. But I think it's worth clarifying. This is a date that has come from ABTA, and I know part of it has come from the reason around their bond providers and protecting it under there. And I know there's a question on the Q&A here around, you know, doing school businesses, and if they give a credit, it's not going to be for this for this school year, it's going to be for next school year, so it's not going to be booked until September, October. So, I mean, Farina will be able to confirm this, but my understanding is if you can come up with a suitable agreement that you and your client agree with, then I don't think there's a problem going beyond that July date. Is that fair to say, Farina?
I agree. Yeah, it's you know, if you are happy to be more generous than that and agree a later date, and actually, I think the end date with any credit note is, you know, as long as the end date that you're putting on that credit note is fair and reasonable in the circumstances. And I think you could look at it and say, actually, is the 31st of July really fair and reasonable in the circumstances? Should customers get a little bit longer? And if you're happy to give that longer period, then I think you should.
But ultimately, by the 31st of July, if an agreement has not been reached, based on what ABTA are saying, they're saying you should give that customer a refund if you haven't agreed a different timescale.
Yeah.
Okay, thank you. A few of our members, and I've had queries on this before actually, is obviously the situation has changed rapidly over the last couple of weeks, and in some circumstances tour operators have been saying, yes, we will give you a refund if the FCO's advice changes, and then obviously we were advised that the PTR were potentially being reviewed. So now tour operators are going back to customers and saying, well, actually now we're going to offer you a refund credit note. So some customers are complaining that the goalposts are being moved. Where do you think tour operators stand in trying to deal with these customers and changing the advice that's being given?
It is a really tricky situation. It is legally, it's a tight spot because you know, you have you know, customers have made a booking with you on certain terms and conditions, and if your terms and conditions are drafted properly, they're drafted in compliance with the PTRs, and it will outline within those T's and C's that customers are entitled to a full refund in the event the package organizer cancels the package. And so now to sort of turn around and say, actually, we're not going to offer you that, legally it is a difficult position to be in, which is why it needs the way of an actual rule change behind it, in my opinion, to really make it enforceable. So it's not a great, and it just isn't a great message to be giving to customers either. And I think commercially, I think you have no choice really but to appeal to customers' better nature and really make it clear that these are unprecedented situations. It is an unprecedented situation. You are just trying to sort of work through in the best way that you possibly can. Unfortunately, you know, especially where you're in a position where you've paid suppliers, and I think that's one of the key arguments that you know you should be using is, you know, we've paid our suppliers, we're not going to get that money back. So you know, we really would be taking quite a significant hit now if we gave you a cash refund, and we'd really like you to stay with us as a customer, so offer a credit note. And I think that's why in some situations you are getting a higher credit note being offered. So you'll get some companies that are offering 120, 125% of the original booking value as a credit note, because it is a sweetener to try and say, look, you know, we would prefer you to postpone your booking and take this credit note, and as part of that we will offer you more in that credit note as a result. But you know, there's no denying that legally it is a tricky position to be in.
Absolutely. And is the advice still to deal with customers that are within the next 3 weeks or so, and that anyone beyond that, again, it's just a matter of waiting to see what the position is at that time?
Yes, that's right. I think that's all travel companies can do. I think just deal with the bookings on a 3 to 4 week basis, and just assess the situation, because it is changing quite quickly.
Absolutely. And we had a few questions on our webinar last week, actually, and one again on travel insurance. And Matt, I don't know if you heard any instances where travel insurers have been paying out, or even Adam, perhaps. You know, is there any feedback on that at all?
No, I mean, I think from discussions we've had, I think that argument is still ongoing about who is responsible. But you know, I had a conversation with someone this morning saying that the fact that, and I know this got brought up last week, but the fact that travel insurers reissued policies to remove coronavirus from the policy surely is an admission that it was included in previous policies. So it feels like everyone is sort of standing still at the moment, waiting for someone to blink and show their hand. But I don't know what you feel, Farina, but it seems to me that pushing them down that insurance route still needs to, be the first port of call, really.
I think so, yeah, and I don't think anybody would could argue against or blame you for using that as the first port of call and saying, push to the travel insurers to see what cover you have. Obviously, if insurers are pushing back, and you are having to put something in writing, then so be it. I think one of the questions last week was around whether there was a feeling that, if travel insurers could come back and try and claim something from the travel companies in the event they paid out and then decided legally they shouldn't have it. I think that the reality of that happening is really low. On what basis really would travel insurers be looking to come and recover from tour operators? They have a contract with a contract of insurance with the customer. So I think, advice does remain, push back to the travel insurer and see what cover the customer has. And I think that particular question as well that we have on the Q&A is around the travel insurers pushing back and saying that they would only cover the package organisers' financial failure. Well, they don't need travel insurance for that, because you will already have financial failure insurance in place that covers you for insolvency. The customer wouldn't be making a claim on their travel insurance for that. So there seems to be a little bit of confusion there amongst that with that particular travel insurer as to what they would actually cover legally or not. But the advice remains the same: keep pushing back.
And one of the questions we've had is what's the best approach for tour operators kind of to advise customers? Should they be saying that the holiday is cancelled because there's a problem in the destination country, or that because we are in lockdown here? What do you think is the best approach on that?
I think, yeah, I mean, and this is the tricky part, because there are sort of two ways of looking at it. One way of looking at it is that we are in lockdown here, so customers are not able to travel, and that's the best route for the travel to try and make a claim on the travel insurance, because that's a restriction that's being placed on us as individuals. That means that we can't travel, and so that makes it easier, in my opinion, to make a claim on the travel insurance. But the other part of it is, and what the travel insurers are pushing back on, is the fact that in destinations now, in most countries, there are travel restrictions in place, there are social restrictions in place, hotels are closing down, flights are cancelling, and so actually, even despite everything that's happened here, most package organisers, I think it's safe to say, can no longer provide packages for the next 3 to 4 weeks at least. Even if they wanted to, because of all the restrictions that are in destination now. And so I think the travel insurers are basically pushing back, saying, well, irrespective of what's going on here, the package organizer cannot provide this package because of everything that's going on in destination, and trying to push back on that basis. And I think what's really difficult from a tour operator's perspective or a package organizer's perspective is, actually, can you genuinely sit here now and say, yes, we could still provide this package were it not for the restrictions being placed on you by the FCO? And I think that's an increasingly difficult question, and I think more and more you have to say, no, you can't provide that package anymore. And that's where I think this issue of, people almost, throwing it back to each other, I think that's why that's happening.
And just to clarify, to be absolutely clear, because we've just had one question on it, we're talking about packages here. So if it's an accommodation only booking or a single component, it's the package travel regulations don't apply, and therefore that would be the operator's own terms and conditions.
That's right. So and if those terms and conditions are with a consumer, generally, they have to be fair. And what we would normally say with non-package bookings is you would refund to the customer what you can recover from the supplier. That would be the fairest way of dealing with it. And unfortunately, if that means 100% cancellation charges and you can't recover anything back from the supplier, then you would push them to make a claim on their travel insurance, because they don't get the PTR rights. But I think the key there is to make sure that whatever you impose on the customer is fair and is reasonable.
Thank you. And we've had a question kind of comparing the situation with trying to push back customers to their insurers, but also at the same time talking about the refund credit voucher. Presumably you cannot do both at the same time.
No,
they're two different things, and you try the travel insurer if that doesn't work. Well, I guess they're two different things completely, aren't they, really?
They are, and the key point here is customers are not entitled to double recovery, so customers can't go and get a refund from the travel insurer and then and still accept a refund credit note from you. It's got to be one or the other.
Okay, thank you. And does anybody have any advice on the best approach for customers? I mean, there are obviously lots of customers due to pay remaining balances for upcoming tours, and they're in limbo as to what to do because, you know, they don't know whether their trip's going to go ahead, whether they should pay the balance. Have you been dealing with any questions on that at all?
I have, and ultimately it is a commercial decision for you to make in terms of, you know, if you look at the terms and conditions, if a customer fails to pay by the balance due date, that would normally give you the right to cancel that customer's booking and retain their deposit. But at the same time, in these circumstances, you can't blame customers for not, you know, for not actually wanting to pay their balance right now because of everything that's going on. And I know there are companies out there that are delaying the balance due payment and saying you don't have to pay the balance until 2 weeks before. And then that gives you a better idea as to whether it's going ahead or not. And if it isn't, you lose your deposit, I think, essentially, or the PTRs would kick in depending on the circumstances. So I think it's very much a commercial decision. If you aren't prepared to push the balance due date, then I think you have to be prepared for customers not paying the balance, and potentially, you know, then customers losing their deposit.
Yeah, absolutely. And we talked earlier about, you know, the situation changing, you know, over the last couple of weeks. And we've got one member who had a group travelling to Italy, and the group agreed to a postponement of the tour until December, and new ATOL certificate and confirmation was issued. But now the tour is saying they want their money back, or the group is saying they want their money back. Presumably, because they've agreed to the booking being changed, that is now subject to the normal terms and conditions because they agreed to the postponement. Would you agree?
I would agree, yeah. So they're cancelling a holiday that's due to travel in December now, so you would be entitled to impose your cancellation charges.
Okay, thank you. Another question we've got is, one company has said that if the client pays the full balance on its due date, we will move them to an alternative date in 2020, 2021. If they don't pay, we can cancel and retain the deposits. Is that legal?
If that's in your terms and conditions, in terms of if you don't pay the balance due date, if you don't pay the balance by the due date, we will cancel and retain the deposit, then yes, that is legal. It depends on the time to travel. Obviously, I'm giving this particular advice around the balances on the assumption that these holidays are not due to travel for a fair few months, or at least 2 months anyway, with a balance due date. And so, you know, the PTR obligations aren't kicking in yet in terms of, you know, you don't know whether you'd be able to provide that package in 2 months. There's still a chance that you could do. So on that basis, you would impose your standard charges. So yeah, if customers, that sounds legal, but it will come down to what's in your terms and conditions.
Great, thanks for clarifying that. I think that is starting to wrap up all of the questions that I can see. Matt, is there any other questions that you can see on the Q&A that you'd like to pick out?
I will. I'll pick one out so that Farina can answer it, if that's all right.
Thanks, Matt.
Someone's put on there, and I think this might have been covered before actually, but about coronavirus counting as force majeure, and how would that affect the rights for refund?
So with the PTRs, it's unavoidable and extraordinary circumstances, and there are very specific rights that customers have and obligations that you have in relation to that. So it's not necessarily a force majeure issue when it comes to the PTRs. It's unavoidable and extraordinary circumstances, and it's written in the PTRs what you have to do in those circumstances. Away from that, so if you're looking at non-package bookings, then yes, force majeure would come into play. And again, it depends on what your terms and conditions say around force majeure. You have to have a force majeure clause in there to be able to rely on it, essentially. And likewise with commercial contracts, if you're looking at your contracts with suppliers, force majeure is an issue to consider. But it will very much depend on when you entered into those contracts. you know, because if you were to enter into a contract today, coronavirus would not be force majeure because it is an unforeseen event, whereas if you entered into a contract at the beginning of the year or last year, then it would be a force majeure issue because it wasn't something that was unforeseeable at the time you entered into the contract.
Thank you for that. Matt, we are approaching the hour now, so I think we probably should think about wrapping up. Is there anything that you wanted to cover before we finish?
Well, just one of the other points on there was someone's raised the point that if this situation is deferred and everyone's forced to refund in 3 months, is it just pushing it down the road? And I think that's right. It is just pushing it down the road. So if you are offering credits or you've got a refund, I think it's really important that you speak to your suppliers constantly to see what their position is, because if you've got to give credit or you've got to give refunds, then you know that's got to be matched by what your suppliers are doing for you as well. So do speak to them about credits that are possibly available for future bookings, making sure that it's not in specific customer names, but it's in your company name as much as possible. Just to try and, you know, reduce your potential liabilities as much as possible.
Thanks, Matt. And thank you to all our panelists today, Adam and Farina. It's been really helpful. I think we've got through a lot of questions, which is great. As I said, we have taken a recording today, so we will be making this available if anyone would like it. We also keep lots of updates on our LinkedIn pages, and if you've got any specific queries, then please feel free to get in touch with us. But thank you very much for joining.
Thanks, everyone.
Thanks, bye.
Thanks, everybody.
Thank you.
Bye.